All right, one thing I'm learning more and more about when it comes to the breaker pattern and the in the ICT trading uh, setup is that when we get a breaker like this, a high, a lower low, a higher high, and then it displaces down, creating a fair value gap up here. Price comes back to the fair value gap, a good short entry. This pattern, this whole thing, does so much better when you're at a place that makes sense because these patterns can occur anywhere. And unless we're sweeping liquidity, which is this this high part right here, had been swept. See that little high? It went up and created a breaker and swept and came down, created that short opportunity right there. And then this displacement, I mean, we could be seeing a breaker within a breaker depending on how you look at it. You can get a high, low, higher high, lower low. Now it's been displaced down here past this one, right? And here's the fair value gap, and now it's coming up into that fair value gap, and what is it doing? It's possibly going down. Now, if my bias in the daily chart or even hourly chart was short, then I would think that this would be a great mouth-watering opportunity. And if this had swept the highs on the daily chart, which we see this line up here and how close we are to that, I would be even more interested in shorting this. But we didn't. We swept an internal liquidity high, and it did provide for the scalpers a couple of good short opportunities right here. And the question is, should you take those when you see liquidity high, when you know that, when you believe the liquidity draw is going to be, let's see the daily chart here, when we think the liquidity draw today is going to go up over top, right? So the liquidity that it had, let's take a look at this. This is the weekly chart. This is the hourly chart. So we think that the draw's up. Then this is not as appealing as we thought to try to short this into the downside. Okay. So that's the thing that every trader has to try to reason in their minds. And I'm not saying don't take these temporary short trades. I'm saying that I would be interested in taking these trades every time I see a breaker and I see a value gap, I want to just take it. First thing I'm looking at though is, did it sweep liquidity somewhere? And it did. But the bigger picture maybe isn't necessary at this point, because all we're trying to do is get a 1-to-1 or a 2-to-1 reward on this trade, and it certainly did that. And who's to say we shouldn't take these trades here when the drawn liquidity is up higher? A lot of people actually say don't do that. The probability of the trade is less, they say. And they're probably right if you're looking for a gigantic move. But in the scalping world, you don't need the weekly or the daily chart necessarily to take these kinds of profitable trades. The internal model is doing pretty good here in that it swept liquidity somewhere. It swept liquidity on this time chart. In fact, that might be the way to look at it. Okay? This liquidity up here on the daily and the one up higher, even on the weekly, is the draw. That is where we're wanting to go. But as you know, price chops around creating and generating buy side, sell side liquidity all the time. And when it creates a breaker situation here with a fair value gap and retests it and starts to go down, and we see that it has swept liquidity on the internal model on the same time chart, this might be still valuable to some, and it is to me, to do a quick scalp on it. So I just want to make that note. I just want to make that point, and the point is breakers and fair value gaps, these patterns right here that you're looking at, are so important, and they become more and more valuable when they are at key levels, meaning sweeping liquidity either on the buy side or the sell side. If we saw a breaker at the bottom that swept some internal liquidity, creates a fair value gap, and even if the draw is down on the daily or weekly, we know that that's probably going to go up at least to what? Well, OTE, some kind of Fibonacci retracement. Every move retraces. You get a big move up like this, and it sweeps liquidity, creates a breaker with a fair value gap, then it's probably going to pull back 50%. which is probably around what this had pulled back. If we measure it right now, that makes perfect sense that it pulled back right at to 50 to 60%. That's right. That's what it did. So using multiple time charts, using areas of liquidity in correlation to the breaker block pattern are very important. If the drawn liquidity is up higher, but the move needs a correction, this is a perfect example of a move needing a correction. Even if the drawn liquidity is higher, and that's probably where it's going, having the flexibility and the skill set to trade internal models with internal liquidity sweeps against the external models and external liquidity sweeps. If we can get that skilled, I think we will be profitable traders. Peace.